Well, in Finstreet today, we have with us Mr. Shah, who is the Vice President at IIFL Securities, to talk about how auto finances growth, asset quality is panning out in Q2 as well as going ahead as well. Welcome to the show, Viral.
Thank you, Abhishek.
To begin with, we saw slowdown in disbursals in Q2 FY25 for many of the auto financiers. Now, is it seasonality or, just in case like Sundaram Finance, where it declined both YOY and quarter-on-quarter, what is your take on disbursals momentum that you saw in Q2 FY25 for auto lenders?
Sure. So, disbursal momentum which is moderating and slowing down, I think it's a function of the cyclicality of the segments that they are operating in. Vehicle finance, each product segments typically have cycles which could be say anywhere between 2 to 3 years, and because of which now we are seeing the slowdown in the auto sector as such, which is driving the slowdown in the disbursements. But whereas if you look at the slowdown in the AUM growth, I think part of that majorly is because of the base effect. We have already seen that the base in FY24, which is FY23, was low, which is why the percentage growth in FY24 was high. Whereas as we move into FY25, the AUM growth is further going to any which ways decelerate because of the base effect now catching up.
You might have heard many on the con calls about, talking about their asset quality outlook. Are there payment issues which are cropping up in auto finances, or you may say that inflation might be hurting them? Is it a fair reading?
So, if you again over here look at it, inflation in the sense that the earning, because majority of these vehicle finance products, so whether you look at a commercial vehicle or a tractor or a construction equipment, those are actually income generating assets. Right. So, in case of a commercial vehicle, if you look at the freight rentals, they are also kind of still holding up. So, the profitability for many of those drivers, at least as of now, we don't see that being impacted. Having said that, inflation does definitely play a part and a role, because even after that, you need to have a certain disposable income to cater to your own personal needs as well as also for your business purposes. So, having said that, I think it is playing a part. And on top of it, the entire rural economy, if we look at it, we are seeing the pain points in terms of the MFI segment which is there, right? Which is also driving slowdown as such in the rural geographies. So, we also need to be mindful of that. And from that perspective, I would say there is some impact, but it's not say anywhere comparable to what you would have in case of say MFI, because even the product characteristics are different. This is a secured product, that is an unsecured product. So, we have to be mindful of that. Having said that, versus the starting point, there is some deterioration which is there.
Net interest margin has come under pressure for most of the lenders that we have seen reporting the numbers. So, what is hurting them? Is it only the cost of funds or also the impact on lower yields?
So, if you look at two parts of that, right? Yields, I think yields are structurally increasing, because that's the nature of how these vehicle financiers operate. That being a fixed rate book, over the last 1.5 to 2 years, they have taken rate hikes. It gets reflected only gradually on incremental basis. As the share of those higher rate book increases in your overall AUM, your yields will keep moving up. The NIMs that have come under pressure in last 1.5 year is primarily to do with your cost of funds inching up materially. So, you have had nearly 200 to 250 basis points of rate hikes in terms of your cost of funds, which has has led to your NIM compression. Going ahead, I think even from where we stand versus what the expectation was, probably we are going to see a delayed rate cut cycle this time around. So, to that extent, I think there will be some earnings cut which can come through for some of these NBFCs, so as to say, who are fixed rate lenders, because the markets and the analysts had started pricing in some degree of rate cuts starting from say end of this calendar year, which potentially would be more like say delayed by a quarter or two.
Well, almost all these NBFCs are very strongly capitalized, anywhere between 19% to 20%, except for Mahindra Finance. Now, Mahindra Finance is capitalized at about 16.7% versus the regulatory requirement of 15%. If at all stress increases, perhaps we hope not, but if it increases, there will be impact on capitalization. So, your take on capitalization of the auto financiers, especially with respect to Mahindra Finance, who is closer to the regulatory requirement?
So, as you mentioned, in case of most of the other auto financing NBFCs, the capitalization is pretty healthy. In case of Mahindra Finance, we need to take into account the fact that it has a corporate parentage of the M&M group, right? So, raising capital and capitalizing it is not a challenge. In fact, last year we have seen Chola Finance also coming and raising capital. So, that is not something would be an issue. It's more a function of when you will need the capital, because capital is a raw material for all the lenders, right? So Mahindra did not raise capital in last 2 to 3 years. Potentially they may have to come and raise capital. Having said that, but their growth is also slowing down. So it is going to be a function of how your growth plays out. But getting that capital or requirement, I don't think that is an issue.
So you don't see any capitalization issue with any of the lenders. That's nice. What are your top picks in the sector?
So our top picks would be Chola, followed by a Shriram, and followed by a Mahindra within the auto financing space. We see Chola as a now lender who is making a journey from being a vehicle financier to being a more diversified player, and which is where a lot of his non-vehicle finance segments are ROA accretive. So you will see his earnings growth leading the loan growth. So that is what I would say our top pick is. Followed by Shriram, where the valuations are still more comfortable and the profitability and growth are decent. And in case of Mahindra Finance, I think we have seen a large leg of derating which has already happened in last 3 to 6 months. So from here on, we have much more valuation comfort. But yes, we do see that that is a business that inherently has more cyclicality and seasonality. So which is why in our packing order, it is the third lender.
Thank you so much for your time at Finstreet.
For more news and updates, all you need to do is follow CNBC TV 18 on all of our digital platforms.